In this video, we are going to be going over Bitcoin for Muslim beginners. So this is a Bitcoin for Dummies video, but you are not a dummy. You are a Muslim and you are here to learn about Bitcoin, what type of impact it has on your life, how you can invest in it, if you should invest in it, and a question that a lot of people ask, is it even halal to invest in? Now, some context here is that I have been in the crypto game for 6 years. I have made a lot of money in it, alhamdulillah. In fact, over the past 2 years, 2024 and 2025, I made more money in crypto than in my own businesses, and I make millions in my business alone, alhamdulillah, right? Now, here's the issue, is that there is a lot of speculation on this question. Is it halal? Is it haram? I have done the research from the scholars, from the sheikhs. I've seen what they had to say, and I understand Bitcoin to a very high level, which I can teach you to a simple, basic understanding level to where you will understand it enough where you can actually invest in it if you would like to invest in it, or just understand it for the mere purpose of having a conversation. Now, we're going to start off with what Bitcoin really is and why it was even created. And in order to understand that, we need to understand what is money. Now, money is not real. Now, a lot of people are going to raise their eyebrows at the fact that I said that money is not real, because money is actually not real. Money is a representation of something else, which means that money is just a representation of value. Money is a tool. And what money is really doing for us is doing three things. It's exchanging value, it's storing value, and it's measuring value. So here's how I can best articulate this to you. Let's say that it's Eid and you want to buy a goat. Well, in today's day and age, you're not going to be able to trade a cow for a goat or a cow for multiple goats. Maybe some people would take that trade if you understood how that barter system works. But in most cases, you are going to give somebody some money in exchange for that goat. And that is an exchange of value. Now, I did bring something up, is that back in the old days, people used gold to exchange value. People used the bartering system, which means that, for example, if I have this whiteboard, I can give this whiteboard in exchange for a goat if that was of equal value to the person who's giving me the goat. So both parties have to agree that this is of equal value exchange in order for the exchange to occur. Okay, so this is what makes something permissible. I go to somebody who has a goat and I'm like, well, Mr. Sir, I have this whiteboard. It is a fantastic whiteboard. It is of great use to you. In exchange, I can give you this whiteboard for your goat. Okay, and this is the exchange that we will be making. Okay, however, the bartering system does not really exist too much anymore. People still trade, people still barter. However, most of it is done through money, okay? And back in the day, in terms of fairly recently, it was done through gold. Now, money is used to exchange value. We already went over that. Money is also used to store value. You put money in a bank account and it is now stored as value. You go to the bank and you're like, all right, cool, I've given you $1,000. Now I know I have stored money in the bank that is $1,000 worth of value. I can buy $1,000 worth of value of something. So something has to be worth $1,000 in order for me to buy that. And the reason why I'm saying it like that, you might be thinking, okay, this isn't rocket science. The reason why I'm saying that is because it's going to open up more nuances for what we are going to talk about on this whiteboard. Next thing is, money is used to measure value. Okay, how much is something supposed to be worth? Well, this whiteboard may be worth $200. Okay, in today's money. In tomorrow's money, it may be worth $250. In yesterday's money, or in the past money, it may have been worth $150, right? But money is used to measure that, okay? And that measurement is always going to change based off of the condition of the money, basic economics, which means, actually, we're going to get into that. I don't want to complicate this right now, which means that basically the money is going to, the value of something is always going to change, but money is used to value it. Now, here is the important thing that you need to remember at all costs about money. Money only works when people trust money. Money only works when people believe in money. If everybody in the world today got up and said, I don't believe in the US dollar anymore, the US dollar would never exist again. It would cease to exist, all of its value would be gone, and therefore the United States would probably get overthrown by another government. Okay? That is just how it works. If people all got up and said, you know what, we don't believe in the Japanese yen, we don't believe in the US dollar, we don't believe in the British pound, we don't believe in these currencies anymore, and therefore we have gone back to gold, okay? And gold is the only thing of value. Then people would stop exchanging money, and money would lose all of its weight. It would lose all of its trust. It would lose all of its value, okay? So this is one thing you need to understand about money. And there's a really important reason why I'm saying that. But before I get into that, we have to understand that today's money is fiat money, okay? So what is fiat money? Fiat means that money is government money, okay? It means that this is a centralized money. Now, what does centralized means? It means that there is some sort of central institution, some sort of governing party, some sort of school where there is a board that decides what happens with this money, how it moves, how it circulates, how much money actually exists in circulation, which means in the whole world, how much money actually exists. So how much the U.S. government's going to decide how much of the U.S. dollar exists, and the Great Britain is going to decide how much of the pound is going to exist, and India is going to decide how much of the rupee is going to exist. And this is very important to understand because this is going to lead us into Bitcoin, okay? Now, the issue with fiat currency is that it's printed by policy. Okay, and it's not backed by gold. So in 1971, something very interesting happened with the US dollar. Now, the US dollar used to be backed by gold, which means that for every dollar that the US had, it had an equal amount of gold literally pegged to it. So I want you to imagine a US dollar, and then I want you to imagine that somewhere in a bank or in a vault, there was a piece of gold that was responsible for that US dollar. So every time that US dollar was moving, it represented the gold. So the money in itself, the paper in itself, didn't have any value. It was just nothing. It was just a piece of paper. But the paper itself was like a receipt almost that, look, I'm giving you this dollar, and therefore this dollar has a representative in the bank that is actually a piece of gold. Okay, and the more dollars I have, the more pieces of gold in the bank represent these pieces of paper, of money, and therefore when I'm giving you this money, I'm actually giving you gold. Okay, so when I go to the grocery store and I'm buying something with this piece of paper, I'm not buying something with a piece of paper, I'm buying something with gold, but the piece of paper represents the gold. Now, that was the standard, but in 1971, President Nixon in the US did something very interesting, and this is how we see money today, is he removed the backing of the dollar. He removed the backing of the dollar that it had with gold. Okay? So gold is now not pegged to the US dollar, which means that now when I'm giving somebody this piece of money, I'm just giving them perceived value. Okay? Perceived value, which means that this piece of money actually has whatever value the US government says it has. Okay, now this is a whole different conversation. We can go into how the money actually holds its value. This is like economics and natural resources and army power. And we can go into the whole argument, but that's not what this video is about. You're here to learn about Bitcoin, okay? So this becomes a very big issue because the more money that is printed by this government, whether it's the British pound or the US dollar or the Canadian dollar or the rupee, you are going to notice that the more money that they print that has nothing backed, it has no actual backing, which means that there's nothing pegged to an actual valuable resource like gold or diamonds or pearls or something. Well, the more that's printed, the less that money is actually worth. And because that money is worth less, that means that the price of things is going to rise, okay? So I'm gonna use this to, a very practical example here. So the more money they've printed in the US, okay? This is called inflation, by the way. So the more money that's printed in the US, the less that money is actually worth. Because let's say that, here, I have this box right here. Okay, so let's say this is my box, okay? Now this box is all the money that exists in the world. And I have to now give everybody a piece of cardboard that represents this box. But I just, decided that because this box is literally all we have, and this is all that money is really backed by, I'm just going to cut more and more and more and more pieces. It's still the same box. Just because there's a million pieces of this box doesn't change the fact that when we put those million pieces together, it's still this box. Maybe 1,000 pieces of this box are bigger chunks of this box, but it would still equal one box. Another example that we could use could be like a cake, right? You have a cake, and if we cut it into 10 equal slices of that cake, well, if you form all 10 of those slices, it's still one cake. But if I cut 100 pieces of slices, right, each person gets less of the cake, but it's still the same one cake, which means that the more money that they print, the less that money actually has its value because it's like a smaller piece of the cake or a smaller piece of cardboard. And if the whole US circulation currency came together, it would all equal the same amount of value, okay? So that's what they do, is that they inflate it. They inflate the amount of money, and therefore it loses value. Now, a country that has done this is Venezuela. Now, Venezuela has gone through some crazy crisis. It's on the news. But they inflated their currency to the point where people have these big stacks of money that hold no weight. Like, you can take this big stack of money, and it could be millions and millions of Venezuelan currency, but it actually buys you nothing. Nada. And that's why Venezuela had to adopt US dollars instead of Venezuelan money, because they're like, well, this is actually worth nothing. It doesn't matter if I have this much of it, it's worth nothing. It's like they have like all these little tiny crumbs of a cake, and like it equates to nothing, okay? Now this is very important to understand, by the way. Now, the more money that's printed, the same goods that you would have bought last year would be worth more. And this explains why sometimes one day you paid $2 for a cup of coffee, and now you're paying maybe $3 or $4. Because the money circulation increased, the more amount of money there is in circulation, the more those goods are going to cost. More the coffee is going to cost because those businesses operate on the same money, okay? So this is a very easy way for me to explain it to you. So the issue here is the people who created Bitcoin understood this. They understood what governments were doing with inflation and with their currencies. And this is why Bitcoin was created, because your money loses value even if you work hard in this case. So if you take $100,000 and you put it in a bank and you store the value, what is going to happen is that $100,000 is going to lose maybe 8% a year, depending on the currency. It's going to lose 8% a year. So your $100,000 is going to turn into $92,000 the next year. So instead of your money being worth more to you a year later, you actually lost money because they printed more money, okay? They printed more money, and therefore your $100,000 is just a smaller piece of the cake now, okay? It's a smaller overall piece because let's say there's $1 billion in circulation now, right? But yesterday there was $100 million in circulation. Well, now you only have a fraction. In the beginning, you only had a fraction of 100 million, and now you have a fraction of $1 billion. So $100,000, if we do the percentage of $1 billion, is a way less percentage of the pie than if it was $100,000 out of $100 million. You actually have more spending power. So I hope I articulated this well to you, because these points I've targeted a few times to see which point actually clicks with you, okay? Now your money's gonna lose value, and this is called inflation. Now here's a really, really good example of what can potentially happen if inflation continues going. Now, this is the money supply. This is represented by a balloon, okay? And have you ever had a balloon, you blew it up for somebody's birthday or some sort of party, or God knows, whatever you did? Well, it gets to a certain point where you inflate it enough that the balloon pops. Does that make sense? Well, if you keep inflating the money supply to a certain point without actual backing, what's going to happen is that it's going to pop. And then the currency is going to never exist. It's going to cease to exist. And this is a big risk with the US dollar. This is a big risk with a lot of other currencies around the world, is that they will one day fail to actually exist. And this has happened historically. There have been so many currencies historically that have inflated to the point where it just burst. Okay, and therefore the currency does not exist anymore. Therefore, they had to create a brand new currency called something completely brand new so that they can trick people into the same system over and over and over and over again. And here is the main issue why this happens, is because it's backed by nothing. You are literally trading pieces of paper that are backed by nothing when you have money. And this is why you should fix your mindset about money, because money is not real. It's just numbers on a screen, pieces of paper. It's backed by nothing. And why are we stressing about something that's quite literally backed by nothing? It is just a piece of paper. It's like a receipt, okay? Now, Bitcoin solves this issue. And the reason why Bitcoin solves this issue is because while fiat, the US dollar, the Japanese yen, the Great British pound, the Canadian dollars, the Australian dollar, whatever it is, because fiat leaks value because they're just making so much more money out of thin air that has no actual backing, that isn't backed by anything, that I can't go to the bank and be like, hey, I have these $10 right here. Can you show me the gold equivalent, or can you show me the value equivalent? Maybe they could even give me some sheeps for my $10. Hey, I have these $10 and I could go to the bank and they'll pull out, hey, by the way, your $10 in your hand, this is the sheep that represents this $10. This is actually some of the value. No, you go to the bank and they'll be like, this is your money. It's backed by nothing. It's just a piece of paper. It's nothing. So while it leaks value, Bitcoin is the opposite. Bitcoin has a limited supply, which means that there's only so much Bitcoin to go around, and there's only so much Bitcoin to ever be made in the world, okay? And there is a limit to this. I'm not going to go into the whole details of how that works, the mining cycles and whatnot. That's a very complicated video that I can make simple as well. So if you're interested in stuff like that, I can explain that as well. But what you do need to understand is that Bitcoin limits the supply, which means that the more people who purchase Bitcoin, the more Bitcoin that is being mined, that is it. There is going to come a time where no more Bitcoin is going to be created. There's going to be no more Bitcoin left on earth, okay, for people to actually buy, all right? And it's going to now become an exchange of value instead of something you can acquire. Okay, so what is the difference here? Right now, in this given time, you can acquire Bitcoin. You can go onto a website, an exchange, and you can go buy Bitcoin because it's available, okay? But there will come a time where there will be no more Bitcoin ever. And that's when the only way that you can get Bitcoin is through exchanging some sort of good and service, okay? So for example, I could give you this whiteboard, but in exchange, I would need some Bitcoin, brother. You know what I mean? And that's the only way you would be able to get Bitcoin. You can never just outright purchase Bitcoin ever again. Okay, unless somebody wants to actually trade, real money for Bitcoin. But we don't even know what's going to happen with real money. Maybe it'll burst, right? And we won't have a currency to rely on. And this stuff happens. Don't act like this stuff doesn't happen. It's happened. The world has been around for a very long time. Money, the concept of money and trading has been around for a very long time. Now, Bitcoin has some beautiful things about it. Number one, it is digital, which means that it operates on the internet. But this is also a major confusion amongst people, is that Bitcoin, it is digital. It is a cryptocurrency, but it is a tangible asset, which means that it took actual energy to produce the Bitcoin. This is why Bitcoin mining is a thing. It requires energy to mine a Bitcoin. And that energy means that the Bitcoin is a tangible asset. So it's not like money where it holds no absolute value. It's just printed out of thin air. The most value some money has is the fact that it's paper that came from a tree. Bitcoin required actual energy to produce. So it may be digital in the way that it's traded and the way that it's populated and the way that it is stored in terms of value and the way that it's exchanged and the way that it's measured, right? But it is a tangible asset, which means it was tangibly created through mining, which is a form of energy. Now, I'm not going to go into how mining occurs because that is a whole different concept of its own. But if you are enjoying this video and it's been informative so far, leave a like, leave a comment, let me know what it is that you have questions about, and then I can make videos about them. Next thing is that Bitcoin is scarce, which means that let's say that there's only 1 million Bitcoin. Well, the less and less and less Bitcoin there is in circulation. What does circulation mean? Circulation means that it's up for grabs, okay? Which means that it's circulating, it's being exchanged, it's being stored, it's being measured, and it's just going around and around and around and around. It's going from my pocket to that person's pocket to that person's wallet to go buy that thing. It is just circulating, just like how money circulates. So the amount of Bitcoin that is currently in circulation that is being moved dictates Bitcoin's value, okay? So because it's scarce, that means that the less and less and less Bitcoin there actually is in circulation means that there is more of a price or value associated to Bitcoin. It is measured a lot higher, okay? So the best way I can actually articulate this to you is that if we have the cake and we have 10 slices of the cake, well, the 10 slices can be worth $10, okay? $1 per slice. But as each person takes a slice, because the slice there's less slices, the value of each slice increases. But there is something you have to keep in mind here, is that if nobody wants the cake, if nobody actually wants it, then nobody would actually associate more value to each slice. Now, the best way to actually describe this to you is, okay, look, if we have a cake and it's a disgusting cake, well, each slice could go for $1, but I might come in and be like, well, the cake's not that good, I'll pay you 50 cents for it. I could do that because the cake's not that good. Nobody actually wants the cake. So even if all 10 slices, there's only one left and all 9 were eaten, okay, and there's just one cake slice, because nobody wants that cake slice, I can actually negotiate and take that slice for a lot less than it's worth, for even less than $1. But with Bitcoin, because everybody agrees that Bitcoin holds value, it's like digital gold, because everybody agrees on this fact, the less and less Bitcoin there is, the more value each one will hold. So because everybody loves this cake, it is the best cake on planet Earth, and there's only 10 slices, when the 9th slice is gone and there's only one left, that one slice can be worth thousands or millions of dollars, even though initially each slice of the cake was only $1, right? So it depends on how many people actually want it and how many people actually declare that this thing has value. And this is why money only works when people trust it. Bitcoin also only works when people trust it. And people trust Bitcoin. People have associated Bitcoin to actual value. People have associated this whiteboard to actual value. Now, one day, if somebody decides, well, you know what? I have decided that gold in itself holds no value. I have decided that the pebbles at a beach are actually more valuable than gold. Well, would anybody agree with that person? No. Because we all know that the pebbles on the beach hold no value. Gold actually holds value. But if everybody in the world decided, you know what? This crazy person that's saying pebbles hold more value than gold and gold actually holds no value anymore, I believe him, and every single person hopped on that bandwagon, guess what? Gold would cease to exist. You could buy golds for pennies, and then the pebbles on the beach that everybody has access to would start to be worth millions. And this is the observer effect. Why superficial things exist. For example, in countries like India, people with fair complexities are considered more beautiful. Why? Because people have decided that. It doesn't matter if God created everybody beautiful. If everybody sits in a circle of government and everybody in this circle decides that, you know what, we have now decided that the fairer a person's complexion is, the more beautiful they are, that is just law. That is just how it works. And this is also why Islam exists, because religions were getting corrupted, scriptures were getting corrupted, because people decided this, right? And people are wrong a lot. But in money, people are not wrong, because people decide what holds value. All right? People have decided that money holds value. People have decided that Bitcoin holds value. And people have decided that gold holds value. So Bitcoin is like digital gold because it's scarce just like gold. The more and more gold that has been discovered and mined successfully, the more gold will be worth. So that means that the less gold there is to discover out in the world, so I could just go with my little shovel and start digging for gold, and the less likely it is for me to actually find this gold, the more gold will be worth. If it was very likely for me to pull out my shovel and go to any dirt or cave or anything and start digging and finding gold, well, gold wouldn't be worth much, right? But because it's so scarce, because there's only a limited amount and it's really hard to find, well, gold holds value. Same thing with pearls. You know, it's very hard to get pearls, and that's why pearls hold value. Diamonds, right? But now you can produce diamonds in a lab, but because people have decided that diamonds are valuable, it doesn't matter if they're produced in a lab. They still hold value because all the observer effect. It is the observation of the people that decide if something holds value. So if everybody decides one day that the US dollar holds no value anymore, I have now decided and declared alongside my 7 billion counterparts, my 7 billion friends on planet Earth, 8 billion friends on planet Earth, that money does not actually exist and it holds no value and the US dollar will cease to exist. Guess what? The US dollar will lose all its power in a day, okay? Now, the next thing is that it's decentralized. This is one of the most important things, and this is one of the things that actually makes it the most Islamic. And this is where a lot of sheikhs and scholars who have completely misinterpreted Bitcoin, they have a lack of education on this matter, have misspoke. And this is why you shouldn't blindly listen to sheikhs and scholars. You guys call them the people of knowledge. Everything in life has nuances and context. It is those sheikhs and scholars who have actually taken out the time to study what it is that I'm teaching you right now who can give you the best advice on if this is halal or not. It is the sheikhs and scholars that will listen to it from a face value and be like, oh wait, it's decentralized, which means it has no government, which means that the US doesn't control Bitcoin, Australia doesn't control Bitcoin, Brazil doesn't control Bitcoin, Russia doesn't control Bitcoin, Saudi Arabia doesn't control Bitcoin. Oh, because it has no government party. Oh, no. This is haram. Forbidden. What? No, this actually makes it more permissible. And the reason why is because Islam operates on fairness and transparency. Look at the nikah contract. You need witnesses. Look at a lot of the things that occur in Sharia law. Witnesses. People have to observe and witness what is going on. Even when you're taking your shahada, you can't just take your shahada and be like, La ilaha illallah Muhammad Rasulullah. Somebody has to be there to witness the fact that you are now a Muslim. Okay? There's the same thing here. Decentralized means that everybody gets to see what is happening in terms of the public record of transactions when it comes to Bitcoin. It is open source, which means that the world is the government. It means that the people are the government. It doesn't matter if you're Donald Trump or some sort of layman just doing a regular job. You both get to govern Bitcoin. And that is why it was created, to create fairness, to create an equal playing field. Now, that doesn't change the fact that Donald Trump can go buy a bunch of Bitcoin and the layman can't buy a lot, so spending power may be different, but they both get to see what's going on, right? They both get to govern it. They both get to decide that, you know what, this transaction actually happened, because that's just how Bitcoin operates, right? Everyone gets to share the same record, so everything is being shown. It's like a receipt, and you can see every single transaction. I'm gonna give you some more examples in a second. There is no cheating, okay? There is no lying. There's no double spending, and it all runs on math. So for example, if I were to go to Miami Beach right there, you can see Miami Beach from here, and I were to go buy myself a burger. Well, if I bought myself a burger without telling anybody, and it was a little secret, well, nobody knew that transaction happened, right? It was a secret move. Imagine all the secret moves that are being made with fiat currencies that nobody knows about, all the dollars that are being spent that nobody knows about. Well, in Bitcoin, it doesn't work like that. You can see exactly what wallet sent money to another wallet. You can see exactly what is going on in terms of the actual transactions that are happening with Bitcoin, okay? Now, this makes it very neutral. This makes it a very neutral way to transact, because there is no governing party. There is no bank. There is no centralized person who is governing this. Now, I can see where the problems can arise. If something goes wrong, well, who do you go for help? right? Well, this is why you have to be diligent. This is why wallets are really, really important. When it comes to Bitcoin and crypto wallets, there's something that you have to understand about them, is that there's levels to it. Now, there is the brokerage account, okay, when it comes to Bitcoin or any sort of cryptocurrency. This is where you buy the Bitcoin. So for example, Coinbase, Binance, these types of platforms where you can buy Bitcoin. Each country has different ones. The one I use in Canada is very different from the ones in the US because it's tailored to Canada's regulations. So Bitcoin has become more regulated. Crypto has become more regulated. Okay, so it has become centralized in a way where the government can actually, put some rules and regulations on it, but the principles still apply, right? So you can buy it from the brokerage account and store it in the brokerage account. Now, this is the most risky, and I'll explain why. You can have it in a digital wallet, so you can download an app, and the app will give you a set of words that you can write down in case your app goes missing or your phone dies or something gets stolen. You can get back into your digital wallet and you can store it in your digital wallet, or you can have a physical wallet, which is like a ledger. And the physical wallet, all you have to do is transfer the funds into, or the crypto into the physical wallet, and you can hold it in the physical wallet. Now, there's risks associated to each one of these. With the brokerage account, the risk associated is that there's only a certain amount of insurance when it comes to these brokerage accounts. Some of them will only insure up to $250,000, some will insure up to $1 million, some will insure less, which means that if these people were to go out of business or something were to happen where they shut down, they are only legally required to give you that amount that they're insured up to. So if you have $1 million in crypto and their insurance amount is $250K, well, you get your $250K, but you lose $750,000, okay? If you move it to a digital wallet, the insurance is you. You gotta remember those words that wallet is gonna give you so you can get back into the wallet in case your phone gets stolen or the app crashes or something happens, okay? And then with the physical wallet, it's the same thing. If it's safest because it is absolutely in your control. It does not rely on the internet or some app. But if you lose the actual key, the wallet, the ledger, it's like a USB drive almost, or like an SSD. You know those hard drives, external hard drives? It kind of looks like that. If you lose that, then bye-bye Bitcoin. Bye-bye all your money. So it's just like this money. If you lose your cash, if you lose your wallet, your money's gone, right? It's the same concept. So you might be thinking, oh, this is risky, but you're playing in the same risk field every single day. You're technically taking on the same levels of risk every single day with regular fiat money. Now, one thing to really, really keep in mind in terms of these wallets is they all operate on wallet addresses, which means that there's a unique number that these wallets have. And this is how you are going to send and receive Bitcoin. So for example, if I have a friend and his name's Ahmed, and I'm sending him Bitcoin, well, he's gonna give me his wallet. Now, if something happens where he sends me an incorrect wallet number, even by a digit, so let's say his wallet number is 00001, and he accidentally sends me 00002, well, I have sent that money to somebody else. And this is why it's very important to be diligent with cryptocurrency, all right? So each wallet has a specific address, and you need to overlook, double check, triple check, quadruple check that you have given this person the right wallet address, all right? And that you are sending the money to a right wallet address, because this is where people get scammed, this is where people lose their money, and then they don't know who to go to, who to cry to, because there's no government party. Well, the open record, the public record is going to show you exactly where you sent the money and who exactly has it. Well, they're not going to show you the identity, but where exactly it went, what wallet. But to recover that money, it'd be kind of hard, right? But this is where people put the trust in the banks and stuff. Well, if you wire transfer money to somebody's bank account by accident, you don't get that money back either. It's happened multiple times. Scams happen everywhere, okay? So if you're not diligent and meticulous and detail-oriented in how you're sending and receiving your money and where you're storing your money, you are going to get scammed, whether it's crypto or actual money or gold or whatever it is, all right? You have to be responsible for what you are doing in order to store the value that you have. So whether that's fiat money or Bitcoin or gold, okay? Now, because it's open source, it's a transparent government, which means that everybody has a public record, okay? Everybody knows what's happening with the Bitcoin and who's it being sent to and who's receiving it. If Ahmed sent me money, everybody's gonna know that he sent me 1 Bitcoin. And then if I send him, half a Bitcoin later, everybody's gonna know I sent him half a Bitcoin because these wallets are exchanging value. And this is why Bitcoin has a very strong playing field in terms of making money, because you can go look at the most successful Bitcoin traders, the people who actually trade Bitcoin, go look at their wallets and the moves that they're making. You could just copy their moves. I'm not recommending that you do this, but this is an advantage because think of how many transactions are happening behind closed doors that we don't know about with regular money, right? Just like I said, I could go to Miami Beach, buy a burger, and nobody would know it. It could be a haram burger. It could be some haram purchase. Nobody would know, right? Nobody would know. But over here, they may not know what the transaction's for, but the money got sent. And it's publicly there, and everybody can see it. Everybody's a witness to the fact, okay? Anyways, so it runs on math. It runs on, there's no double spending, there's no lying, there's no cheating. Everybody shares the same record. Bitcoin is like digital gold, okay? This is the association that people have made to it because it's actually digital gold. Because gold is mined. Gold has a scarce amount. Gold is pretty much decentralized. There is a amount of gold in circulation in the world or hidden in the world somewhere, all right? Nobody owns all of it, but you can acquire it, right? And the more people own gold, the more rich they really are as a country in terms of resources, right? So Bitcoin is like digital gold. It's actually the most accurate representation of what Bitcoin can be. With Bitcoin, the ownership is legitimate, which means that if you have the Bitcoin in your digital wallet or your physical wallet or a brokerage account, which I don't really recommend you hold on to money in a brokerage account. If it's over the threshold, go look at the insurance if you're already investing. It is ownership legit, which means that you own that Bitcoin. That is your asset. That doesn't mean that somebody can just take it away from you unless it's in that brokerage account, by the way. It means it's yours until you do something where it's not yours. Whether you exchange it or you lose it or whatever, right? Because you can lose the keys or you can, just like any money, okay? So it is actually yours. It is self-held, which means that you are accountable for your own money, okay? There is no bank needed. Now, here is the very interesting concept that a lot of people don't really get. In Islam, we avoid riba, right? Do you know what happens when you put your money in the bank? Do you know what they do with that money? It's gonna open up a lot of eyes if you don't know. So if I put $1 million in the bank right now, you know what they do with my money? They take that money, they take it out of the bank, all right? They put it into the digital account that there is still my $1 million in there, but they've already taken the $1 million out. And what they do is they go invest that money into different funds. They might buy Bitcoin, they might do something to multiply that money for themselves. The bank is going to do this so that they can make money on our money. This is the whole point of the bank. Go read the terms and conditions on what you're actually signing up for when you put your money in a bank. So even by keeping your money in a bank, you're paying riba. You're helping these people, or really you're earning riba. You're helping these people earn interest indirectly. And you might be thinking, well, where am I supposed to put my money? Ta-da! Bitcoin. It exists for a reason. It is a more halal solution. Every single Muslim that has put their money in a bank is indirectly helping that bank earn interest. If I put $1 million into that bank and the bank is making 8% on that money that they took from me, the bank basically took a loan from me. If I gave them $1 million, they took $1 million loan from me, then use that money to go into the stock market or even invest into something that might not even be halal, and they earn interest on it. Or they might take my money and give it to somebody else's loan and earn interest on it. There are so many ways that banks make money. Go read their terms and agreements. This is why you don't skip those little terms and agreements, or when you're signing for a new bank account, you don't just, all right, cool, well, they're going to keep my money safe. Do they? Did you know that a lot of banks don't even have insurance? So if the bank just goes down, your money goes down with it, right? Maybe they have a little bit of amount, just like those brokerages accounts, they'll give you a little bit, but bye-bye money, right? So this is why Bitcoin solves that problem, because you don't need a bank, right? You're in control. You are in control. You don't need any permission either, right? You don't need any permission to send your Bitcoin to anybody at any time, right? With banks, they'll hold your checks for five business days. They'll put a cap on how much money you can send. They'll alert it, be like, oh, no, you can't do that. We're going to hold your money now. You have to clarify to us that who you're sending to, you got to provide us documents, right? You got to show us that you pay taxes on this money, that this is legitimate money. The bank, they require so much for money that you actually give them, and then they utilize themselves to make money on. They will take your money, give it to somebody, and earn interest on your money. as a Muslim, do you think that's fair? You know, I'll keep it real. All my money's in crypto. You know, this is just like a little bit of a thing. Like, do not, by the way, this is not financial advice. This is just what I do. If you do it and you don't go in there with knowledge and diligence, you may fail. This is why I'm making this video, so that you may know more. But all my money's in crypto. I only keep a very limited amount in my checking account. And I hold a lot of cash. I barely have any money in my digital accounts, you know, my banking. I don't need to. I know what they do with my money. I don't want them to do that. I'm not trying to be involved in no interest. Come on now. Halal out here. Anyways, you get to control the money. You get to control what happens with the money. And that's the perfect part about Bitcoin, right? And the more and more and more that Bitcoin starts to establish itself and show how its market operates, the more and more people start to adapt Bitcoin and start to realize that it is real and start to trust it and say that, you know what, Bitcoin holds value, the more and more that it justifies that Bitcoin is a better solution than the fiat currency. It justifies that Bitcoin is actually more halal than the fiat money. We're literally exchanging interest-based money every single day. And when the Prophet ﷺ said that it's impossible to avoid interest at one point, we are living in those times, brothers and sisters, okay? So this is very, very important to understand. You control the money. Now, I want to share my exact crypto trading strategy with you, my swing trading strategy that has made me a lot of money, alhamdulillah, over the past 6 years. I can share that with you, but I would need some likes, some comments, questions that you guys are going to ask me, because I can't make these videos unless I know that there's a demand. I know I say this a lot, but I operate on these rules, right? It takes a lot of time to make these videos. I don't know if you can tell, and a lot of frustration. My phone died twice, and this is why the videos look a little different in between. You know, I spit these off the dome, but my phone died twice, and I have to recreate them. Anyways, if you like this video, if you appreciate the effort, just leave a like. Now, this is a very, very important part. Now, this is probably the most important part of the video, is where we're going to actually talk about, is it halal, okay? And there's a lot I haven't talked about yet, so don't think that I declared it halal already, because there's a lot of haram stuff that comes with Bitcoin as well. And I'm going to talk about the price confusion. Now, a lot of you may be thinking, well, Bitcoin's already above $100,000 now. My opportunity is gone. I should have bought it when it was $1. You know, all the opportunities to get rich are now gone. This is the mentality that makes Bitcoin haram, because you are looking at it from a point of, let me get rich quick. I just need money right now. I need to cash. I need a cash injection into my life, and therefore Bitcoin may be the solution. And now my opportunity is gone, right? That is a gambling mindset. That is a get-rich-quick mindset. In most cases, that is highly unrealistic, okay? It is highly unrealistic. What you are not going to focus on is the price of Bitcoin. Never focus on the price of Bitcoin. There is always, always, always a way to make money in this world, my friend. The markets could be down. The real estate market could be crashing. The stock market could be crashing. Crypto could be down. Life could be going chaotic. There is always a way to make money. Money is an infinite resource, and it requires somebody with knowledge and the ability to understand how money works to be able to make it. I'm going to explain something to you. Never focus on the price, focus on the percentage. Okay, so fiat, this made-up currency that Nixon decided to not have backed by anything, and it's just inflated to the point where it might burst one day. Now, fiat loses 2 to 10% yearly, which means that if you got $100,000 in the bank, you only got $92,000 after that.
So just a disclaimer, it does not matter what the price of Bitcoin is. You can always buy a fraction of a Bitcoin. So if Bitcoin's at $100,000 per Bitcoin, you can always buy $100 worth of Bitcoin, and you will get a fraction of a Bitcoin. And the same rules apply. If Bitcoin goes up 7%, your investment will go up 7%. For example, if you buy $100, it goes up 7%. Now you're at $107. Hope that makes sense.
Is that year over year, you lose money. Now, a major rebuttal that a lot of scholars have said is that Bitcoin is volatile, and therefore you cannot trust it because it's just going up and down, up and down. They have no idea what they're talking about, okay? What the scholars don't know is that the fiat currency that everybody's using, the US dollar, the Japanese yen, all of these, the rupees, everything, it also goes up and down. That's why Forex market exists. Now it doesn't go up and down like Bitcoin does, right? Yes, Bitcoin at one point was $1, and now it was then it went up to $100, then it went to $1,000, and $10,000, and then $100,000. Yes, it had huge gains, and yes, a lot of people got rich. But there's going to come a point in time where it's just going to become a standard exchange of value. There will be no get rich quick on Bitcoin, but there will always be an opportunity to make money, just like the fiat currency, which means that if you focus on the percentage, you will always make money in Bitcoin. Okay, so Bitcoin may be volatile, but it has grown historically, which means that even if Bitcoin, if this is a chart, if Bitcoin went up and then it went all the way down, and now everybody's like, oh my God, Bitcoin's dead. We invested, we lost all our money. But then it went up again. And everybody's, oh my God, Bitcoin's going to the moon. We're all going to get rich. And then Bitcoin went down again. And everybody's, oh my God, Bitcoin's dead. It's going to zero. We're all going to lose our money. We're all going to die. And then it goes up again. And they're like, oh my God, Bitcoin, it's I should have gotten in sooner. Everybody's getting rich. I'm missing out. And then it goes down. What you'll notice is that historically, it always goes up, which means that the line looks like this, even though the chart looks like big volatile wave, okay? Even though the chart is choppy like this, the line has looked like this. It has grown historically, which means it has proven itself to be a good store of value not because of Bitcoin itself, it's because of its properties. It's because of these properties right here. It's because of the fact that there is none being made anymore. There is a certain amount of Bitcoin that will be mined, and once all of that Bitcoin is mined, that's it. That's where the games really begin, because that's where Bitcoin won't be up for grabs, but it will only be up for exchange. Okay? So very, very important to understand. So there's been years where Bitcoin was plus 300%. Huge, all right, in 1 year. There's also been years where Bitcoin was negative 70 in the year, which means that as somebody who invests in something like Bitcoin, you cannot be emotional. You cannot be opening your account and looking at the wallet over. I used to do this, by the way. So in 2020, when I first started investing in Bitcoin, I would look at my BTC, my ETH, all my stuff, like every day. I haven't opened my crypto account in almost a year. I don't care. All right, well, the main crypto account where everything is held. But like my swing trading, yeah, like obviously to buy and sell, I have to open that. But I don't look at the actual value of what's going on in my account. I don't care, because I know that historically Bitcoin, if I hold it for the next 10 years, if I'm alive, inshallah, right, boom, it's going to go up. I just understand this, all right? So I don't care. And it's also money I knew that I was willing to lose. My first ever amount I tossed into any sort of crypto was 3,000 Canadian dollars. And I was willing to lose that money. I was like, cool, 3,000. Gone. If it goes tomorrow, it doesn't. And as I kept making more, I kept throwing in more money that I knew that if I lost this money tomorrow, I wouldn't really care, right? So that's also a strategy on how you got to approach this, because if you can hold it long enough, or if you know what you're doing in terms of swing trading, you can make some pretty good gains. But never, ever, ever get emotional if it's going down, because that is what people want. All right, the big institutions that have now gotten into Bitcoin, by the way, the US government and the big companies like BlackRock, they want you to be scared. You know why? Because when people are scared, oh my God, Bitcoin's going down, we're all going to zero, we're all going to lose money. You know what happens when Bitcoin goes down? That's when they buy, because they want to buy when the price is down. So that when the price goes up and they're making 300%, 100%. Do you know how much 300% is? 300% is double, okay? And then another, and then another. Okay, so if we're looking at 1,000, 300% is 2,000, then 3,000, then 4,000. You just turned $1,000 into $4,000. That's a lot of money. Okay, so if the institutions are buying up $1 billion in Bitcoin, they just printed out $3 billion out of nowhere in actual value, not inflated money. They didn't just turn $1 billion into $4 billion and now the pieces of the pie are smaller. No. They actually produced real money, real value. They went from $1 billion to $4 billion in real value. Bitcoin grows historically. So if we're looking at how Bitcoin grows, it's obviously volatile, right? Obviously volatile, which means that we're going up and down, up and down, and up and down. But historically, it's been a 50 to 80% over time. You can't get that anywhere else. You can't get that in the stock market. You can't get that anywhere else. And you're especially not getting that in fiat. You're losing money every single year because of inflation And then on top of that, they are using your money to get into interest activities, loaning your money out, making interest, putting your money into potential haram money plays, haram stocks and index funds, and they're making money off of that, right? So now you've been warned. Now you know. So this is a warning actually that the money that you're spending in terms of fiat is being used for haram purposes by the banks. And this is why the Prophet ﷺ said that there's going to come a time where interest is going to be unavoidable. Well, yeah, just by spending these dollars in your account, you're using interest, all right? Because they already took your money and exploited it. And you signed it. You signed a contract to let them do this, okay? This is why I hold cash. This is why I have crypto. This is why I have barely any money in the bank. I only have it because sometimes you need it for debiting and God knows what, right? So when we're talking about fiat's so interesting because it loses 8% a year. Okay, while Bitcoin's volatile, but it grows historically, fiat loses 8% a year. So if you have $100 in fiat currency, it goes down 8%. Now you have $92. But here's where things get really crazy, is that because inflation occurred, the price of the product that you want to buy will go up because they have to make up for the loss, all right? They have to balance the scale out. So this is gonna make a lot of sense. So if you had $100 and it went down 8%, okay, because they inflated this balloon so much, to the point where, it's about to pop. They now have your dollar, your $100 sitting at $92, and the product has to go up 8% because the value of the dollar went down 8%, which means that they balance things out by keeping you stuck and keeping you poor. And this is why a lot of people never get rich. This is why a lot of people stay stuck in finances, is because they are only reliant on fiat currency. They put their money in the bank, their money's losing value in terms of actual value, and then everything else becomes so much more expensive. So did your money grow or did it lose its value and everything else got more expensive? Yes, right? Because it doesn't matter if your money was sitting safely in the bank. They made money. The banks made money on your money. They made their interest. They made their 8, 10, 20%, whatever they made, right? But you lost money by keeping your money in the bank. You lost your money by not investing in something that actually grows. You lost your money by not investing in something like Bitcoin or any sort of asset like gold, right? Bitcoin's not the only solution here, by the way. You can own gold. You can own actual assets and commodities, right? And this is why the USA, this is why they do what they do. This is why they're a superpower. This is why other countries try to become superpowers, is because they know that they inflate their currency so much that if they don't hold power and leverage in the world, that their currency is just going to pop and burst like a balloon. And then the USA and all these other countries who do these inflationary methods, they lose their power. They lose, people stop believing in the currency and therefore the country loses power. Why do you think they did that thing in Venezuela with the oil? Why do you think they did that? Because now they have more natural resources. They have access to it, right? Which means that the US dollar lives another day, right? It lives, it survives, right? And the more power they have, military power, economic power, attention power, right? Whatever it is, even social media in itself, the more they get, the more they get to keep this little balloon alive. Because the second that their power goes away, the second that the people start to realize that, wait, we can't rely on the US anymore, or any of these countries anymore, well, they stop believing in the money. And when they stop believing in the money, and these governments keep inflating the dollar, right? They start printing more and more and more. The balloon bursts, and then the currency dies. And then the people will have to move over to something like Bitcoin anyways, okay? They're gonna have to move to gold anyways, okay? This is very, very important to understand, by the way. Now, Bitcoin is very opposite. Now, let's say Bitcoin goes up 8%, or gold goes up 8%, or anything goes up 8%, right? Any one of these assets. Well, what's going to happen is if you have $100 in the bank and it goes up 8%, well, now your $100 is worth $108, which means you have more spending power, which means the absolute opposite happened with what's going on with your fiat currency, with your US dollar, or your Japanese yen, or your rupees, or whatever it is, right? So Bitcoin in this scenario it doesn't necessarily reward short-term plays. If you are somebody who's constantly looking at your account and you're like, oh, my money's going up, my money's going down, if you're constantly emotional about it and you don't have patience, what is going to happen is you are going to sell at a loss, or you are not going to be able to handle the investment of Bitcoin. You just won't be able to handle it, okay? Now, if you have patience, on the other hand, Bitcoin rewards patience, because what did I say? It grows historically over time if you hold it. Unless you start to swing trade it, that's where you can really get the benefits, but that's a whole other skill, and I can teach you that, but it would require for you to actually do the work, right? Now, Bitcoin rewards patience. It will grow 8%. Sorry, it will grow 50 to 80% historically, and it has, but over time, it's going to grow less and less and less, because there will come a time where there won't be any more Bitcoin in circulation. And that's when these little growths, these little price jumps, they're going to get lower and lower and lower. Right now, we're going to see the biggest price jumps, and then eventually they're going to get lower and lower and lower and lower. But this is going to take decades, all right? You may not even be alive for this. I may not be alive for this, right? We have to see. Okay, now this is the question that a lot of people have been wondering. Is it halal or is it haram? Well, what makes something haram? And this doesn't matter if it's Bitcoin or if it's money or if it's any sort of trade. These haram rule applies to all of them, all right? Regular money can be used for riba. If you have unknown knowledge about what it is that you are purchasing, that is called gharar, right? And this is haram. If you are using a leverage, and I'll explain what that is. If you are day trading or gambling, that is haram. All right. Some scholars will say day trading is not haram if you know what you are doing, if you're going there with knowledge and strategy, and you have risk aversion, which means that you can put in a certain amount of money into the market and you're okay with losing it. So for example, even me in the market, my first ever investment in Bitcoin was $3,000, right? It was $3,000 I was willing to lose. I just tossed it in there and I said, okay, Allahu Alam, whatever happens, happens. I am now detached. So you have to be detached for this as well. And if it causes if it causes harm, which is zulm. So if it does any of these things, it is considered haram to trade that currency or asset or commodity, okay? Which means that this doesn't only apply to Bitcoin, it applies to all things like gold and money. Now, what makes it halal? Actually, wait, there is something I have to explain to you. What is leverage? Okay, so I'll quickly explain this. So leverage trading, so for example, let's say I'm trading Bitcoin, but in order to make sure I make even more money off the trade, if I bet correctly, if I bet on the market correctly, I can leverage my house, for example, okay? So I'm leveraging my house. Now, if the trade goes wrong, I lose my house too. But if the trade goes right, I get a massive gain. I could turn 1 Bitcoin into 100 Bitcoin if I want to, okay? But that depends on the leverage. Now, this is basic gambling. Okay, this is haram. Leverage trading is haram, point blank period. Like, look, you're leveraging your house. You're gambling, okay? You're betting your house, basically. So this is haram. Now, what makes something halal? Well, if you are going to buy Bitcoin, you're going to hold Bitcoin, or you're going to swing trade Bitcoin. I'll explain what swing trading is. For example, if I go, and this is like a very basic explanation. If I find a shepherd and he has 10 sheep, and I buy all 10 sheep for $1,000, and each sheep is worth $100 now, but I can now go to the market and I can sell those sheep during Eid when they're the highest value. Even though I bought them for $100, I can sell them for $500 each. Well, I made a big swing trade profit because I bought them when the demand was low, and then I sold them when the demand was higher, right? So it's a swing trade, okay? Now, that's a really good way to make money, and that's how I make my money in crypto, right? So I don't do day trading. I don't do any of that. I just swing trade. I buy when it's low and I sell when it's high. And no, I don't have any market timers. I'll teach you if you guys want it. I can teach you my exact strategy. No problem. Made a lot of money over it the past few years with it, alhamdulillah. Okay? So you have to buy, hold, or swing. You have to understand the value. You have to understand Bitcoin. You have to understand what it is that you are doing. So that is why we have created this video. And then it has to be stored safely. So you have to understand where you're holding your money, holding your Bitcoin. Is it in that brokerage account? Is it in a digital wallet? Is it in a ledger wallet? Do you understand the security measures like I explained to you? So do you understand these things, okay? And it has to be traded diligently. You cannot scam people. You cannot finesse people. You cannot, send it to the wrong address. wrong crypto address, because that is not diligent, that is not meticulous, that is not ethical. So you have to be able to understand these things. So as long as you follow the same rules that you would trade gold in a halal way or trade money in a halal way, as long as you apply the same principles to Bitcoin, it is halal, because Bitcoin in itself is actually a more halal solution than fiat money in itself. It actually aligns more with Islam, with the open sourcing and the scarcity and no interest and all that stuff. It aligns more with Islam than actual money that we use on a daily basis, okay? So that's it for this video. May Allah bless you. This was a long one. My phone died a few times during this video, so please, please, please like this video, comment on it. I put a lot of effort. This video took me all day, all right? I don't think a video has ever taken me this long because of how many times my phone died and the little complications during this video. But we made it work. May Allah bless you, and subscribe to the channel, and I'll see you in the next one.